CPA Canada enjoys testing on new and emerging topics. On recent CFEs, we had an electrical car company, a solar panel company, vaccine manufacturing company, all of which are in current events. What about crypto? How do we handle crypto in CPA cases? Let's take a look at it from ASPE and IFRS. The quick answer is that there is no standard on crypto under ASPE nor IFRS at this point. If you get a question on crypto from a FAR perspective, you have to go through several standards and analyze them one by one. Let's look at an example. Let's say company ABC purchased 1 million of Bitcoins and is not sure how to handle it under ASPE. First, we'll write down our issue statement like this. Then we'll do an analysis starting with the definition of an asset. According to ASPE 1000, an asset is controlled, occurred as a result of past transaction, and future economic benefits will be obtained. The first one, control, is met because the company got the Bitcoins. They can do whatever they want with it. It already occurred as the company paid money to get it in the past. Assuming the company sells it later, it'll get cash inflows, so future economic benefit is also met. Alright, so it's an asset. Let's go to the next one. According to ASPE 1540, a cash is cash on hand and demand deposits, which includes currencies. The term cryptocurrency suggests that it's a currency, but it's not true. Unlike established currencies like the Canadian and US dollars, Bitcoins are not supported by a central bank or recognized as legal tender, so we're going to write that it's not met. A cash equivalent is a short-term, highly liquid investment that is readily convertible to known amounts of cash. This is also not met. Bitcoins don't have short-term life and have significant value changes. Let's go to the next one. Is crypto a financial asset? A key characteristic of a financial asset is that the holder has the contractual right to receive cash or another financial asset from another entity. This is not met because cryptos don't have contractual rights. There is no contract signed. So we'll put this down. Bitcoins don't have contractual rights as they are purchased from third parties on a crypto exchange with no contracts. We got three more: investments, inventory, and intangible assets. Let's pause for a second. You may be wondering, why are we going through so many standards? Well, when we have an FRAO and there is no standard, we gotta do this. We have to analyze several different standards and determine which one applies. In fact, in CFE 2019, a similar AO came up and the solution was to go step by step and analyze different standards. To get RC or C, you're expected to analyze at least a few of those standards. I'm not going to tell you which case it was because I don't want to spoil it for you, but it was under assurance role only in CFE 2019 Day 2. So is crypto investment? According to ASPE 3051, investments include non-financial instruments such as works of art and other tangible assets held for investment purposes. This could be met because cryptos are generally held for investment purposes. We have to look at the case facts and find the intent of the purchase. Is it for investment? Is it held for sale or for another purpose? If it is held for investment purposes, meaning we bought it for short term for capital appreciation and resell, then we'll recognize it as an investment. This means we're going to initially measure it at cost and subsequently measure it using the cost method. Now, what if we held it for sale? What if our company's business is to buy Bitcoins and keep selling them kind of like a commodity broker? In that case, it's inventory. We'll put down the definition criteria. According to ASPE, inventories are held for sale in the ordinary course of business. This is met. We purchased the Bitcoins for resale. And the next two are not applicable. We only need one met, so we can say it is inventory. Typically, we measure inventory at lower of cost and NRV, but for commodity broker traders, it's actually measured at fair value less cost to sell. Lastly, if the purchase is not for investment, not held for sale, then we gotta measure it as an intangible asset. We'll write, according to ASPE, intangible assets are identifiable non-monetary assets without physical substance. This is met because Bitcoins are identifiable and they don't have a physical substance because they're digital assets. The others are met per the asset definition earlier. We'll wrap it up with a recommendation saying since there are no specific guidelines, we'll use judgment and apply the standard that matches the intent of the purchase. Now under IFRS, it is almost the same thing, but unlike ASPE, we do have something concrete. In 2019, the IFRS Interpretations Committee, or IFRIC, concluded that crypto is an intangible asset. But since this is not published yet, we'll have to go through the same steps. We'll start with the definition of the asset under Conceptual framework. Then we'll put cash and cash equivalent. Then we'll put non-cash financial assets. Then investment properties. By the way, there are no investment properties under ASPE. This is only under IFRS. Then we'll put inventory, then intangible assets. Lastly, we'll quote IAS 8 accounting policies, which says that in absence of a specific IFRS, management should use judgment for appropriate accounting treatment. In 2021, the company Tesla bought 1.5 billion Bitcoins. Their CFO decided to create a new account called Digital Asset. And as you can see here, they chose to account for it as an intangible asset. Now Tesla follows US GAAP, not IFRS, but the logic is the same. Now this was a simplified version of how to do FR for crypto, but it can get complicated. What if you're a crypto miner? What if there's a forward contract for crypto? I may make a separate video addressing this, but for the time being, you have good groundwork to get RC or C. Thanks for watching, good luck on your CPA exams.